Today is March 23rd, 2026, and markets are reacting to one thing above all else: a temporary pause in U.S. strikes on Iranian energy infrastructure. President Trump framed it as a short postponement after productive conversations. Whether that's real diplomacy or just a pause button matters less right now than what the market is pricing, which is reduced near-term escalation risk. That single shift pushed Brent crude down more than 10% in one move, and that drop in oil flipped market mood from defensive to risk-on almost immediately. Lower oil eases short-term inflation pressure, at least in perception. That's why equities are rallying today, especially rate-sensitive growth stocks. But this relief is fragile. Iran is publicly denying direct talks, the Strait of Hormuz remains unstable, and any reversal in headlines could snap oil higher just as fast. So the rally is real, but it's sitting on a fault line. At the same time, the Federal Reserve is complicating the picture. Rates were held steady, which was expected, but inflation projections for 2026 and 2027 were revised up. That tells investors rate cuts are still possible later, but less guaranteed. For stocks, especially tech, this creates a tug of war. Oil down helps valuations. A more hawkish inflation outlook hurts them. This week will be about which force dominates bond yields. Now, zooming in on NVIDIA, because that's where the biggest action is. NVIDIA stacked multiple catalysts at once at GTC. First, Jensen Huang projected roughly $1 trillion in chip sales over the next 2 years, tied to Blackwell and Rubin. That number matters not because it's precise, but because it forces analysts to rethink revenue trajectories. If estimates move up, the stock can reprice quickly. Second, NVIDIA is resuming H200 sales to China under licenses. China used to be a mid-teens percentage of revenue. Reopening that channel, even with caps and a 25% revenue share requirement, is still meaningful. It creates near-term upside, but also headline risk. Any tightening or enforcement news can reverse sentiment just as fast. Third, the AI factories tied to the power grid narrative strengthens NVIDIA's long-term positioning, but that's not a one-week revenue driver. It supports valuation, not next Friday's earnings math. So what does this imply for NVIDIA 1 week from now? Think in scenarios, not certainty. If oil stays down, yields stay contained, and analysts start raising targets off the GTC content, NVIDIA could realistically be up 8 to 18% over the week as momentum and flows chase the story. That's the bullish path. The more likely base case is digestion. Good news gets absorbed, yields stay sideways, and investors debate feasibility. In that case, NVIDIA being up 2 to 8% is reasonable. The bearish scenario comes from macro whiplash. If Middle East tensions flare back up, oil snaps higher, or yields jump on inflation fears, NVIDIA could drop 6 to 15% even with unchanged fundamentals. Bottom line, the bias for NVIDIA this week is upward, but volatility is high. This is a market trading probabilities, oil headlines and rates first, and company fundamentals second.